Hi everyone, it's Don again. It's Sunday afternoon at about 4 o'clock, and we did a video earlier for our annual members, and we ended up punching that out on YouTube, and we might do the same thing here. The earlier video was on momentum and how we define momentum, our thoughts on momentum, one of the tools that we like to use, and how we go about looking at it, which you still happen to see here. This happens to be the NQZ. Happens to be a 15-minute chart. We have our GPS distant indicator down here below that we spent some time discussing in an earlier video on the subject of momentum. This time chart, by the way, has a paint bar on here that is congruent, I guess would be the right word, with Swing Machine. Now I'd like to discuss the concept of chop. What is chop? And is it different? Can you have chop with upward momentum and downward momentum? Can you? And I think that you can. And that's maybe the insidious part of being in chop. Chop to me is a narrow price range, but you can still have upside momentum, enter a period of chop, and then go higher, chop, go higher, chop, go higher, right? Or go down. So what do we do in that instance? Because here you can see rather distinctly, here we're in chop, right? And we've been in chop. This is since 11:30, much of that afternoon. Yet, it's still upward momentum. I wouldn't want to be shorting this, but we are in a sideways price action for an extended period of time. So how do you go about identifying that and making a decision as to whether or not you want to get involved? And more importantly, if you do get involved, where do you set one's stops? Where might they be? Now, that depends on the chart that you're using. This happens to be a time chart. This could be a point and figure chart, a line break chart, and so those stops would be maybe seen differently and maybe more distinctly with those charts. But the tool that we would suggest that you get eyes on in conjunction with maybe your strategy is a tool that we call the SMC Dual Fairway. And let me bring that up. So now you can see we have loaded in a tool that we call the SMC Dual Fairway, Dual. And basically it is, we'll show you, come here, Edit, Study, and it's the SMC Dual Fairway. And the settings here for inputs, oops, no, I'm sorry, that's the altimeter, bear with me, had the wrong one. We're not going to use the vertical plotter for right now. Dual fairway is set as true. You could use just one. I have the inner length set at 10, and I have the outer length set at 20. It's a look back. This is the bright red here is the outer, looking back some 20 here. And so ideally, and then the inner looks back 10. So you might think of one as being slow, the other one being fast, and it's looking back, trying to identify periods of price acceptance or rejection where prices are breaking through to the upside or breaking through to the downside. And where it can come into play is that you can begin to see a number of things, but you can use the inner channel, maybe even the outer channel, as a stop level. So for instance, if one had gotten short in here and was riding the momentum down, maybe, just as an idea, they could use the inner channel here as a stop level, and they would actually stop out here. Or if they're trying to get long, they could use the inner channel. If you want to slow it down and take a bigger bite, maybe if this is a 5-minute chart, you could set the outer channel to look back 50 and maybe set the inner channel to set back or to look back 20. Or you want to make it even closer, you want to trade more tightly, you could set the outer channel at a larger number and set the inner even tighter. When you do that, you bring more of the price action into play. You run the risk of bringing in too much noise, but you're trading for smaller bites, and you're going to trade more frequently, potentially. As you look over here we get a move. We break out of the upper channel consistent with this momentum move, and one could be using this potentially as a stop level. And here we kind of go sideways, and I would not be interested in shorting this at all, but I wouldn't want to break this level. You can also sit back in your chair or stand back at your desk and take a hard look if you're trying to determine, do I have an upward or downward sloping price? And I think from here over you can see that prices for the most part gone pretty sideways, and you can see a level of support in here, pretty much the same area, pretty much the same area. So I could even tell you over the next couple of days that what level is that? It happens to be 16,000. Pretty good level of support as we kind of break out, trying to make new highs. So this is a perspective that you could put onto your chart. And here, if you look, let's see if we can get a view on this. Here we break down, we break the lower channel, both inner and outer channel, distinctly weak, and we start to descend down. And you can even see, there's a step here, a step here, a step here, and a step here. We're stepping down, and consistent with momentum down. So maybe if you have your dynamic fairway chart marker on your chart, with your SMC GPS indicator on your chart, and you're running the strategy that you're running, maybe between the two, when the orders pop up and are presented to you, you could say, I understand that it might want to buy here, but maybe I don't want to take it. I am descending down, and I'd rather not go against that momentum. I'd rather wait, that sort of thing. But the dynamic fairway will give you or offer you some perspective. If you'd rather not use the dual fairway, we have something called the dynamic range, which will also show you price action that is stepping up, stepping up, stepping up, or stepping down, or going sideways. And you might think of these price levels, both above and below, as stop levels, or as levels to pay attention to when they get broken, either to the upside or to the downside, because they could indicate that there is now selling pressure at this point. There's no longer any support here, and it's kind of breaking down. Now this happens to be the NQ on a 15-minute. We could do this on any kind of a chart, and just to dramatize this, let's put on a Kagi chart, for instance, which is pretty highly specialized, and we'll make it 3.1 tick. We don't want to go 2 months back. We'll just go 2 weeks back, and we'll see what we see together. Okay, I had to change workspaces. This happens to be the MNQ. My other workspace wasn't loading quick enough, but this is a Kagi chart, and this happens to be the dual fairway, and this is set very tight. The inner channel is set at 3, and the outer channel is set at 12. You can experiment and see what you see. The point being is you can adjust these strategies, these charts. You can not only adjust the leverage, but you can also adjust them to give you the resolution that you want, to be able to see the price action you need to see within the limits of your capital. So you're setting the dimensions, if you will, the amount of money that you might want to risk on any one given trade. you will have to experiment. But here, this is actually the GPS near indicator. I happen to have this on, and this is going to be more active than the GPS distant. And it's going to be much the same, but you're going to get many more signals. You may want to slow it down with the GPS distant. And then here is the this tool of the dual fairway. And again, it's set at 3, but let's slow it down, and you could even slow it down further. So we make the inner length 10 and make the outer 20, and you can begin to see, and even here, you see the level of support, and now we're starting to step up. So maybe when the paint bar is green and we're stepping up, maybe you want to favor those strategies that are firing, giving you buy signals, and we have positive momentum. Or if the buy was here, maybe you decide to wait on it because I don't have that upside momentum quite yet. I'll wait and then follow up that trade. You don't have to enter precisely where it went. You can say I'll wait, and now I'm starting to step up, and maybe now I take it, is the idea. So 2 concepts, momentum and chop, and 2 tools that you could use on any chart, from time to point and figure to line break to Kagi to Renko to intraday to daily, that can help you discern momentum and the divergence of momentum, and also price chop, price advancing, price declining, and price chopping, and not just showing you the chop, but providing you a stop level, either on the high side or the low side, depending on what you might be trying to do. Good luck, everybody. I'm Bag It On, Stock Market Caddy, and we wish everyone a great week. And we are working on, by the way, a tool that we will have the computer discerning the level of chop and making artificially intelligent decisions to adjust a particular strategy as it's trying to trade a particular market. And we're going to keep everybody posted. We know we can do it. The question is, just how effective will it be? We don't know yet, but we're going to be vetting that out and working on it. And our annual members will be the first members to get at minimum a beta copy. So everybody have a great week. Don't hesitate to give us a shout. I'm Bag It On, 813-758-8263. Thanks.